Okay, let's dive right into this explainer. If you're a small business owner or a company director, there is a massive, fundamental shift happening literally right now in how the law views your personal responsibility. We're looking at the 2026 reality of limited liability, and I guarantee you it is not the comfortable safety net you might have been taught it was.
I mean, think about it. Is your house truly safe from your company's debts? Most business owners naturally think of the company as this impenetrable shield, right? You set up a PTY Ltd, then you become a director, and there's this deeply held belief that whatever happens to the business, well, it just stays with the business. You kind of just assume your house, your savings, and your personal assets are safely tucked away on the other side of a solid corporate wall. And to be fair, historically, that's exactly how limited liability was designed to work. But we really need to bust a dangerous myth here.
The reality we're facing, that corporate veil is piercing. There are serious cracks in that wall. By 2026, regulators have essentially decided that directors have had plenty of warning, and they are aggressively prizing those cracks wide open. The absolute protection you thought you had? It's an illusion. Your personal assets are now directly in the crosshairs if you don't understand the new rules of the game. So let's look at Section 1, Cracks in the Corporate Shield. Which brings us to Threat 1, Director ID. There are two specific regulatory threats that are completely destroying this illusion of protection. And let me tell you, the era of soft reminders for the first one is definitively over. So what exactly is a director ID? Well, it's a unique 15-digit number permanently attached to you as an individual. You get one verified identity for life, and it tracks across every single company you're ever involved in. It's issued through the Australian Business Registry Services, and the whole idea is to stamp out fictitious directors and Phoenix activity, where people dissolve and reform companies just to dodge debts. Crucially, you have to verify this yourself online via MyGovID. Your accountant literally cannot do this for you because the entire point is strict personal identity verification. And here is where it gets terrifying. Failing to have a director ID when required is now a strict liability offense. I really want that phrase to sink in. Strict liability. That means you are legally liable regardless of whether you actually meant to break the rule or not. Excuses like, I didn't know, or I was too busy, or my accountant didn't tell me, those are legally useless now. They won't hold up in a court of law. So the crucial point here is the financial stake attached to this. The maximum penalty for failing to have this ID, it runs to nearly $20,000. We're talking about a massive, potentially crippling fine for ignoring a completely free 5-minute online registration. And look, this isn't just an empty threat on paper. ASIC is actively prosecuting people as we speak. They've already taken 11 directors through the courts for director ID failures, racking up more than $40,000 in total fines. In one specific case in Sydney, 2 directors were actually dragged into the local court and fined $10,000 each. ASIC has explicitly stated that these penalties are deliberate warning shots. They're designed to signal exactly how serious this obligation is and to deter the broader director community. So ignore this at your own peril. All right, moving on to Threat 2, penalty notices. Let's look at a mechanism that is fully capable of reaching right through that company structure to grab your personal assets directly. The instrument the regulator uses here is called a Director Penalty Notice, or a DPN. It is absolutely the single most important reason a director can lose their personal wealth over a company's problems. Normally, if a company can't pay a debt, that's just the company's problem, right? But the ATO uses the DPN to fundamentally change the rules of the game. They use it to transfer the company's tax liabilities directly onto your personal shoulders. Now, it doesn't apply to everything. There are 3 specific categories of debt that allow the ATO to pierce the veil and issue a DPN. They are PAG withholding, that's the tax withheld from your employee's wages, the superannuation guarantee charge, or unpaid employee super, and GST. If your company fails to pay these 3 specific obligations, the ATO can issue a DPN, and you are given just 21 days before personal recovery against you begins. And this brilliantly illustrates the sheer scale of the current crackdown. Just think about this jump. In the 2024-2025 financial year, the ATO issued more than 84,000 director penalty notices. 84,000! That is a staggering 136% jump from the previous year. To put that into perspective, the pandemic-era leniency is completely dead and buried. The ATO has switched firmly back to aggressive enforcement, and DPNs are absolutely their weapon of choice. The crackdown isn't coming. It's already here. Now for Section 4, Lockdown versus non-lockdown DPNs. Understanding this next distinction is absolutely vital. It is literally the difference between a fixable corporate problem and a devastating personal debt that could cost you your home. There are two kinds of DPNs. A non-lockdown DPN is your escape route. You get this when the company reported the debt on time, so you lodged your BAS and activity statements, but you just didn't have the cash to pay it. With this one, the door is still open. You have 21 days to either pay the debt or put the company into administration, liquidation, or restructuring, and you successfully avoid personal liability. But the lockdown DPN, that is the nightmare scenario. You get this when the company completely failed to lodge its returns on time. With a lockdown DPN, that 21-day escape route is gone. Putting the company into administration won't save you anymore. The only way out is to pay the debt in full out of your own pocket.
I really want to hammer this point home because it feels so counterintuitive. The single deciding factor between a massive personal debt and a manageable corporate issue isn't whether your company actually paid the ATO. It's whether your company lodged its paperwork on time. A struggling business that can't pay its tax bills but keeps lodging its BAS preserves its directors' options. But a struggling business that just goes silent and stops lodging, that is effectively loading a gun and pointing it directly at the director's house.
Which brings us to Section 5, how to protect your assets. Let's look at the solutions.
So, how do we fix this? Well, the reassuring part is that protecting your corporate wall doesn't actually require any fancy, expensive legal tricks. It basically comes down to two surprisingly boring habits. Number 1, get your director ID immediately if you haven't already. Number 2, lodge your BAS, superannuation, and GST on time every single time. That single discipline of lodging on time, especially when cash flow is super tight and you know for a fact you can't pay the bill, is the most important asset protection move a director can make. It keeps any future DPNs strictly in non-lockdown territory. You also really need to know exactly who this applies to. Who actually needs a director ID? It's not just the active day-to-day decision makers sitting in the boardroom. If you have spouses, family members, or even silent partners listed on the company register as directors, they carry the exact same personal exposure as you do. They absolutely need their own director ID, and they are equally at risk of getting hit with DPNs. When we step back and connect these two major threats, we can see they're logically enforcing the exact same thing, accountability behind the veil. The director ID ensures the regulator knows exactly who you are, permanently. The director penalty notice ensures they can reach right through the company structure to take your personal assets when tax obligations aren't met. Being a director is a real, heavy legal responsibility, and treating it casually is a luxury you just can no longer afford. I want to leave you with this incredibly powerful sting from our source material. If you neglect these two simple administrative habits, getting your ID and lodging on time, you might discover at the worst possible moment that the wall had a door in it all along and the regulator has a key. I think that perfectly summarizes the grim reality of 2026. So I'll leave you with this final provocative thought to take away from today's explainer. Are you relying on a corporate shield that already has cracks in it? Don't wait until the ATO or ASIC forces the issue. Review your director obligations, your lodgement positions, and your tax debt exposure today before a temporary company cash flow issue transforms into a permanent personal catastrophe.